Welcome back to the Traders Network. I'm Michael Yorba, your host, streaming to you live on yorbamedia.com. All right, we've got Nick Santiago with us today, and we're going to talk about a lot of stuff. Nick, thanks for coming back on the show. How are you?
Very good, Michael. Always great to be back. Thank you.
My pleasure. You want to start off talking about the U.S. dollar today, right?
Yeah, I want to talk about the dollar a little bit because recently, it wasn't all that long ago, the dollar broke a pivotal level, and we had an inverse head and shoulders pattern that was playing out to the upside. And once that pattern failed, the dollar really sold off. It's actually oversold now, but it looks like the dollar spirit is broken. And I've been a dollar bull for a long part of 2012, and I have been. But right now, I think it's oversold. Maybe you'll get a small bounce. That would probably lead to an overall stock market correction, maybe in the S&P 500, a shallow correction. And then I think ultimately with all this quantitative easing and stimulus, dollar could go lower. But right now it's severely oversold. So I wouldn't get too bearish on the dollar at this moment because we're coming back into a big double bottom on the futures from May 1st. So, you know, I know the dollar has been really cracked wide open. It's sold off from 84 and change, and it's down a ton right now. But at this stage, the dollar does have some short-term support at this level.
Okay, so a little bounce here, but longer term, it seems to me that there's going to be a lot of push of stimulus into the system. Do you see that this giving us an impetus for a place to short it again? Yeah,
I do. Ultimately, I think that they can take this the dollar down lower, and that's going to ultimately fuel this market. This is probably the first leg up. I've actually missed this rally completely, so I've been dead wrong. I thought, as you know, I said this rally would take place in October. The Bernanke started it without me, so yeah, I mean, right now I look at it as, you know, if you get any significant bounce or pattern, you could probably sell the dollar again down into the 78, 76 levels.
Well, it's not done going down yet, although you do say you have some support, so I really don't want to ask you where we're going to short it again, but do you have any cycle work on this, any cycle work coming out for maybe a time frame for a pivot?
Well, I'm thinking right now probably you reverse it to around the middle of October, sometime around October. The dollar probably could get a bounce now into that time frame. But ultimately, I think with the central bank intervention, not just here, but in China, in Europe, and the United States, these guys are just going to inflate this thing higher. So that's really going to just bring the dollar down.
Okay, but so then let me back up a little bit. Maybe I didn't phrase that properly. Are you saying that where it is now is support and this should hold?
Well, I think it's going to hold for a little while. Yeah, okay. I think on the U.S. dollar index futures, this $79 area, maybe it's $78.50, should hold for a little while. I think that we shouldn't get too much lower than here without a little bit of a bounce, but it could hold up for about 4 to 5 weeks.
Okay, all right, and then I'm looking at a chart of it right now, so it looks like, just eyeballing it, looks like about 81-ish is some kind of resistance area. Do you see it there too?
Yeah, you have a ton of resistance at 81. I think that's a pretty good level, but more so than anything, as soon as you get the low pivot, you know, what I like to do is just take a retrace from where it bottoms, and then I think that 81, 81.50, that's probably a real nice area for the dollar to go back down afterwards.
Okay, all right. How about the gold market?
Well, the gold market today, Michael, you hit a very, very important level today. It was a level I gave out in my chat room just a little while ago live, and I said, you know, if you're an aggressive trader, you could probably short the GLD. Let me just give you the exact number I told them. But what I said was you could probably short the GLD right around just underneath the 172 level, and we've gotten a decent little pullback off of that. That happens to be a monthly chart 618 retrace. So I think that's very, very important for a lot of traders to understand. And what I mean by that is when the GLD topped out in September 2011, I believe the high was 185.85. And now the 618 retrace was just tagged today, you know, right around that 172 level. So, again, a lot of my traders are short the GLD right now for just a pullback, just a scalp trade, not a big deal. But I think gold may have run its course for the short term right now, and but it could be a buy again on a nice pullback. So,
any idea?
We'll be chasing it up here.
Okay, any idea for give us a support level like 1680 or something?
No, if you're looking at the GLD, I think the 156 level on the GLD, if you're looking at the spot price of gold, I think, traders could get really interested in that. Somewhere, I'm going to say the 1640 level.
Okay, a little bit lower. Okay, got it.
Maybe 1660, somewhere there. Yeah, I would not be chasing it up here now.
Okay.
Especially if the dollar is going to get a little bit of a bid now. I wouldn't chase it.
What about the silver market? It broke out on a monthly basis, just so beautiful. And there's really haven't had anybody on the show giving us an idea where they think that may go.
Well, I got to be honest. I think silver right now, I'll use the SLV since everybody has that. But silver, the SLV at $34 is a significant resistance point. I think traders got to be a little bit cautious with it now. It's had a great move. And now you're going to come up. If you look, Michael, you just take the SLV high from the April 24th, 2011 top that week, and you put it to a pivot low, you're going to see that we're coming into a real nice 382 retrace at 34.20. So I really don't see a lot more upside in silver, maybe another 50, 70 cents on the SLV. And I think you're going to hit a pretty good short-term resistance level. After that, you could look for pattern and maybe own it again. But right now, I wouldn't be chasing this up here. It's had a great move already.
Okay, good words of caution. All right, the Freeport-McMoRan, you want to talk about that one?
Yeah, Freeport-McMoRan is actually taken off to the upside. This was another one we just shorted a little while ago in the chat room for just a scalp trade. It wasn't bad, but I had given my traders the level. Let me just get the exact number up here. 42.18, and you can see we went right into that level. That's a 0.618 retrace from a significant pivot. So I think Freeport-McMoRan is a little bit overbought along with everything else. I think the Bernanke rally that we're getting right now is probably going to be faded soon in the market, and then traders just look for pullbacks, and you could get in on the long side again.
Okay. All right. Now, TOL.
Yeah, Toll Brothers I wanted to bring up because this has been the best performing stock of 2012. If you go back to last year's low, and this thing was trading below $14 in October, on October 4th, 2011, and now the stock is up at $35.50. Today, with the mortgage-backed security buying by the Federal Reserve, traders should watch this one for a pullback. Right now, you can't buy it. It probably has another $1 of upside in it, but before a pullback comes. But watch this one around $31. I'd be all over to the upside again.
Okay, all right. And when you say all over to the upside again,
I'd be buying it.
No, I got that part. But I mean, are you thinking that this thing could take us the rest of the year at least?
Oh yeah. This is it. I mean, the central banks. This was the rally that I was talking about that we were expecting in the fall, and they would all come together. But they did it a little bit sooner. I got to admit, my timing has been off on this cycle for whatever reason. But now, I mean, I still can't chase this market up here. I have to wait for a pullback to get in. But the central banks are completely in control. Bernanke's got the bull by the horn. Even though I don't agree maybe so much with the policy, as a trader, we got to trade what we see in front of us.
Yeah, I said that 3 days ago. They're in control. These guys are going to drive this market where they want it to go. And there's so much at stake that they want it to go up. Guess what's going to happen? It's going to go up.
That's it. You can't fight it. There's no sense in fighting it. Again, the unfortunate part is for every action, like Isaac Newton used to say, there's an equal and opposite reaction. This has been the most stimulus I can ever remember in my lifetime, and I've been involved in the market since 1991. So it's pretty amazing to see this. But if this is what's happening, you got to go with it. And then, when you get to the next pivotal cycle, that's where you could probably try to get more aggressive on the short side. But for now, personally, I'm going to be a buyer of pullbacks.
Yeah, I've got to go with you on that. I have three main cycle points: the 21st of this month, the 10th of October, and the 11th of November. And in my opinion, money coming out of the bond market, Jobs Act pushing the investment banking people to create more commerce. This is a perfect storm for a massive, and it's just an opinion, one guy's opinion, massive.
Well, I second it.
Yeah, I think we're going to have a capitulation rally of Wave 5 going into elections.
Well, you have to look at this right now. Today, Mitt Romney, his election campaign is done. President is signed, sealed, and delivered to be reelected, if you ask me. there's no way Bernanke guaranteed that today. There's really no way of Mitt Romney even having a chance in this type of storm. I mean, it's all about the economy and the housing market. They're actually creating another housing bubble down here where I live in Tampa, Florida. I mean, there's house flipping going on like it was back in 2004 and 5. So, basically you can look at stocks like Home Depot, Sherwin-Williams. These stocks are all flying off the charts, and the home builders are one of the biggest gainers of 2012. So I agree 100% with you.
All right. Well, then let's make the most of it.
That's all we could do, Michael.
All right. How does everybody get a hold of you, Nick?
Come on over to InTheMoneyStocks.com. Take a 7-day free trial to our intraday stock chat. You'll see all of our intraday trades. Also, you can come over and try out our research center, get our nightly setups, get our cycle work. You'll also get our nightly videos, and we have tons and tons of information and content in there for everyone.
Great. Thanks, Nick. We'll talk to you soon.
Have a great one, Michael. Take care.
You too. All right, everybody. Nick Santiago, President and CEO of InTheMoneyStocks.com.